All right, what is up, YouTube? I'm back once again. I told you guys I was going to do a midday recap of what's going on in the market, and today I know you guys have seen that the Nasdaq has, went on a decline, pretty much a nosedive, and that pretty much happened. When I was taking my final exam, and I was like, "Wow, what happened?" And pretty much what it was is that you have these tech stocks that were definitely declining to the downside. Um, Such as you have CSX, which is going down, you have Amazon, which is going down, and Apple, Facebook is pretty much going down as well. So pretty much a lot of these tech stocks are definitely going down. Social media sites are definitely going down, and I'm really not sure what really caused a lot of those stocks to just go ahead and give out. But I know when the market did open up, the Dow was up, I think, a pretty good amount. And then after, as the day went on, the Dow just kept trickling on down. We see the Nasdaq, the Nasdaq definitely try to climb higher, and the Nasdaq, was falling right back down. And I was just thinking to myself, this is definitely, one of the weakest days that we have seen so far. And it's pretty much one of those days where you just have the market just swing up and down, back and forward. There's really no solid push to one side. There's definitely just uncertainty in the market just right now, pretty much because we're going through earnings season, and people are they're kind of voting their expectations with their dollars and with their shares. So you will see some tech stocks, you will see other technology stocks or other sector stocks definitely fall on expectations of earnings, or on those anticipation of earnings. So let's go ahead and see what we have here. So we see, the leverage triple Q. Remember, when we play with leverage, the returns are definitely amplified. And when we do receive a down day such as this one, that is exactly what's going to happen. We do see that, Take Two and, the triple Qs definitely, they kind of move in tangent just about. We see, we're at 1900 for this, but today I think we're up about, 3 grand on both, but it looks like they're moving back in tangent with each other. Um, what I see here is that the Nasdaq is gonna keep going up regardless of what's going on. Take Two is definitely going to follow those, and anytime you do invest in stocks that do have that growth, or do they're in indexes, you're pretty much on the right path. But if you start to diverge and go away from those diverge and go away from the growth stocks, that's typically where your gains will definitely diminish. And we see Apple definitely giving back some gains because remember, like I said, those stocks were starting to decline as the day went on, and as we see the stocks definitely declining. I see the Dow Jones is definitely trying to claw its way back up. Definitely went negative for a second and pop right back up positive to 20, up 20 points. So what we see here is definitely a lot of notable stocks that are definitely declining. We see a large, or I pretty much say like a small bar. We can see it definitely playing around the daily moving average, moving it as support. $78 will probably be the daily moving average as support. For Take Two Interactive, and as we see right here, like I pointed out, or 75, 77, 5, 78, whatever you want to call it. But let's definitely go to CSX. I definitely see that will breach below $50, which is definitely interesting because remember, if you definitely, if you think about it, people were expecting the current CEO of CSX, to stay there long term. But once he came out and said, I'm short term, I'm just here to get the company back on track, people are like, wow, what's going on here? Causing, a temporary sell off. And we definitely see the shares move back from that $55 all time high all the way back to that $49.45 current price. So this is definitely an interesting price for me. I definitely might, go ahead and buy some shares right here. We definitely see, management director, definitely go ahead and buy some shares right here. Just definitely investor confidence, definitely stepping in and buying more shares. I mean, this is what happens. When people are definitely confident, they come in and buy more shares. Like I touched on the video before, we definitely see block trades. 3 million shares, 1 million shares. A lot of investor confidence is coming in. Like I said, does that anticipation to those earnings and expectations will definitely start to show. And I'm not sure if people have been buying Apple or seeing huge big block trades of Apple, but we don't see it here. It might be down below, but I'm not sure if anybody's buying Apple in boatloads. But We definitely have to look out for those stocks that are definitely looking to break out. 156 is definitely the all-time high for Apple, and we're $7 away from that, and we have to pay attention to what's going on in the market. Remember, if you're finding growth, that is a good, that's a good starting point. After you find growth, we move on to those dividend plays, and after dividend, we recycle. We look back for growth, and we keep, we just keep the cycle going. We don't want to find any stagnant stocks. If we find ourselves, in a GE, or in an AT&T situation, this is time for us to definitely, step back and say, okay, let's find growth. Let's look for the stocks that are definitely, beating uh, beating out each quarter and definitely moving higher. Instead of going to GE, let's definitely move to Honeywell. You see completely different charts right here. It's just looks like an inverse. We see Honeywell is definitely inverse to GE, and we see Honeywell definitely continues to move up. And like I said, I'll definitely keep you guys posted on if I'm going to go ahead and buy shares. But I'm pretty much going to build up a sizable position before the year is over in Honeywell. I definitely gave up on GE because the stock really doesn't go anywhere, and that's definitely irritating for an investor to see your stock move from you buy at 28, it goes to 30. You think you think it's going to go higher, it hits 32, back to 28, and it just keeps repeating that same cycle, and that's pretty much boring for me. Excuse me, and I really don't want to keep repeating that process with my dollars and having to irritate myself with that. So we see Square Technologies, we see it find support at $25, and that's pretty good. It's pretty good that it's finding technical support at $25. At least we know where the bottom is and where the top is. Remember, Square does report soon, so we should definitely watch out for those, for that earnings call transcript to see what Jack Dorsey will say. And what kind of confidence will he give investors? Will he give shareholders? So that way people can say, okay, let's go ahead, start buying up stock, and next thing you know, the stock is blowing past $30, and we're looking at a company that you should have been in below $20, and people are gonna say, oh wow, we were late to the story. And then that way, people might be saying, okay, it's overweight after it gets past 30. I'm just telling you guys how how these stocks work. After it starts to blow out, people are gonna say, okay, it's overweight, things and that, because they missed out on the gains that that happened below that $20 level. Remember, I was trading this around at that 18, 19, 20, $21 level, and after a while just kind of gave up. But remember, what I didn't realize is that you cannot sit here and try to trade these growth stories. You invest in them and walk away. You just simply don't try to say, okay, I'm gonna buy here, sell here, buy here, sell here, buy here, sell. You're really missing out on the constant gains, the constant gains of the stock. Even though I kind of gave really good price points to buy and sell, what I didn't realize is that from 18, I was buying at 18, selling at 19, buy at 19, selling at 20, buying at 20, selling at 21, buy at 21, sell at 22, and things like that. The process was kind of get retarded. So what people need to realize, if you find growth stories, if you find a growth name, that's for you to invest in, not to trade. Remember, we find those growth stories. We want to feel confident as investors, and we simply invest in the company. We do not trade it. Remember, just like Kramer talks about, you own Apple, not trade it. This is simply why you see Apple's at $99 for the longest, couldn't break out. Remember, these stocks definitely do go in this huge phase, that $90 to $99 phase where they simply can't break out. And typically Apple broke out, and now we're at 156, and people are like, oh wow, we should have bought Apple when it was at $99. And this is what happened when people say, okay, it's overweight, things and that, because people were, they were starting to disregard Apple as not a growth name anymore. You can't really, make a really good return on Apple and things like that. But now people are starting to see that Apple's not going to wait. Apple's going to keep moving higher. Remember, you have to be patient with investments. Not all investments are going to be, like Chemours and just keep running and running and running. If you guys are looking for a position in Chemours, I mean, this is the time to buy. I mean, we definitely see that these chemical names are definitely presenting, growth for us every single time. We see Dow Chemical still moving higher. And even though I'm playing Madden right now, I'm still able to, relay the information back to you guys. But we have to pay attention to what the CEO is going to say, if they're going to give us, some confidence to invest in the stock even more, or some confidence for new time shareholders to actually say, okay, this is my time. I like what the CEO is saying. I'm definitely behind him. It's time for me to buy that stock. And that's typically what you have to look for, with these CEOs. And if the CEO is presenting itself, and if he's trying to find growth, that's the CEO that you want. You definitely don't want a CEO that is definitely ignoring shareholders and probably not taking any suggestions in. We have to be aware of those activist shareholders who try to get the company to split up, and probably split up into different sectors, such as, like, I think the Dow Chemical and Kim Morris was definitely a situation where activists had split up, and Kim Morris is definitely doing a lot better by itself than Dow Chemical. Or that's just a definitely example. I'm not sure if those were the ones that definitely split up, but I'm pretty sure activists are definitely going to get involved to spend their dollar out pretty quickly for their shareholders. Remember, the activists are there for you to make a better return, and if those activists are able to push out a better return, from putting pressure on the CEO, that's really good for you as well. Remember, some activists are trying to get Honeywell to split different divisions up and create different stocks for different divisions. That's definitely a plus, especially if a division in Honeywell is definitely doing really good. So, like I said, we have to be aware of everything that's going on in the market. We have to update ourselves with different information that's coming out. And remember, if you definitely have any free time, we can definitely scroll through those earnings call transcripts on any company that you do like, or maybe the company that you do not like. Remember, it doesn't cost to listen to an earnings call transcript. It's definitely public and free information. What we have to pay attention to is the words they use, like cyclical growth or maybe organic growth. Remember this, you have to be familiar with these terms to understand if the company is definitely trying to BS their way out of the situation, BS their way out of not making the cut, or acting or legitimately just can't do anything and just telling the truth that it was definitely a down season. But remember, we have to know these terms, so that way we can pay attention to what the market is definitely telling us and what that company stock is definitely telling us. So if I'm going to add positions, I'm definitely going to keep you guys in the loop. I don't know. I might start a video game channel because I'm definitely playing Madden while I'm talking to you guys about stocks. You have to be well informed. If you're not well informed, you're definitely going to take hits in the market. And I know a lot of people are definitely trying to push you guys into investing in penny stocks, or maybe try to get you to put all your money in penny stocks, or maybe trade your whole balance each and every single day. That's completely idiotic. Remember, we do not trade our whole balance. We have to have a risk allocation for ourselves, so that way we can understand and we can value our money better. I know it's a lot easier for you to make 100% if you use all of your account balance, but it's a lot easier to lose 100% of your account balance when you trade with 100% of your account balance. But that's definitely all I have for you guys. If anything else comes up in the news, I will definitely keep you guys informed. But I know a lot of these healthcare stocks are definitely, kind of moving up. I know we were in I think Athena Health or Aetna Health, or whichever one it was. I know we were in it for a while, and it definitely exploded out to the races. And that's pretty much what we want. We want to pay attention to those stocks that are definitely oversold, and we want to get those stocks that are oversold on news that isn't so bad, or an earnings quarter that isn't really bad. If the way we can figure that out is we can compare it to the last quarter, and we can say maybe this is okay. It's not really bad how investors are making it seem. Also, we can definitely listen to the CEO's confidence on the call, so that way we can definitely get a good picture on what else investors are seeing to make them sell the stock off like this. We can also look into other things as well, but that's definitely one you can definitely check out to see if the stock is definitely, if this selling is overdone, or if the sell-off is overdone. We can just definitely take a look at that conference call. We can look and analyze, what kind of guidance did the CEO give out for the year. I know one troubling thing, if the CEO can give out guidance for the full year, that's definitely, that's a plus, and that's expected. But if a CEO gives out guidance just for the next quarter, that's definitely unexpected, and definitely worries a lot of investors, because if he can just give um, guidance for the next quarter but can't give guidance for the next year, that's definitely worrisome. And I know that was a actual CEO that that actually came out and said that, which had a lot of investors worried, and it caused a sell-off in the stock. So we have to pay attention to what the CEOs say in these conference calls. We have to understand the questions that the financial analysts and the that the brokers are asking. These CEOs when they're in the boardroom, and when they're delivering the conference call. So it's really good to to be a fly in the wall. I guess you could be a fly in the wall. How I see it. Since you are an investor, you want to check in on your investments. So what you do is I think Robinhood is able to give you the free conference call. You're able to jump in on the conference call while it's happening and just listen to what's going on. Listen to the questions. I know you aren't able to ask any questions, but I know they're going to ask you to register. Register yourself. I know you just put whatever and you just listen to the call. That's pretty much it. And you have to like I said, listen out for different keywords. Listen to how the CEO presents it. You can also look at the earnings call slides. I know those are also available on Seeking Alpha. Earnings call slides, earnings call transcripts, they're all available on Seeking Alpha. And the earnings call slides are just like a PowerPoint presentation without the speaker. You can listen to the earnings call while looking at the slides, and that's pretty much all that is. There's nothing really complicated about that. We're definitely going to talk about Starbucks when they do report, because like I said, this is definitely an investment that I really do like, and I do see those stores that are they're trying to expand overseas. Like I said, I read the article on the Jamaican store that they're trying to get overseas, and things like that. And also Square, I might get right back into this. We see Square is definitely moving higher, but what we want to see is if these levels are justified, right? If these levels are justified, Square goes higher. But if Square reports a bad quarter, that's typically where these shares will definitely drop off, and you will see Square definitely give back. But if these moves are definitely justified, it will be definitely a plus for investors, and it'll kind of suck for me because I'll have to pay a higher price because I'll sit here trading growth instead of investing in growth. But that's the price you pay when you start to play around with these growth names instead of investing in them. So that's all I have for you guys. Remember, if you have any questions, definitely put them in the comments section. I know there's a lot of stocks I could have took a look at, but I wanted to make sure I got that information out to you guys so you can understand the earnings call transcript, the earnings call slides, and that way we can, definitely move forward to, breaking down and analyzing, different, different calls, different investors, I would say, point of views on how they see the stock. But Square is definitely a story that I really missed out on, and I really need to invest in this thing long term because I definitely see the impact, and we can see what happens with American Express, PayPal, MasterCard, Visa, and all those. But they definitely do correlate with each other. If you're not interested in Square, we can do definitely American Express. We can do MasterCard, Visa. But what we all see that they have in common is that they're definitely dipping at this moment, and we have to pay attention to those correlations, those patterns in this sector. Remember, all stocks they somehow give away that they correlate with each other, and that is what we have to pay attention to. So that way we won't be buying a stock and we're like, why is this one moving with that one, or why are these three stocks all grouping together and moving the same way? Remember, we have to be aware of what we're investing in before we invest in it. We have to be aware of what the company is doing before we invest in it. We have to be aware of how the CEO approaches a growth story, but before we invest in it. So, like I said, with that being said, guys, that's all I have for you. Like I said, if you have any comments, questions, anything like that, put it in the comment section so that way I can address it, and we can definitely get to addressing these questions and definitely move towards looking at different earnings seasons for different companies. If you guys want me to take a look at the penny stock, but I'm pretty sure it's going to be pumped up by another one of those YouTube guys, Timothy Sykes, crap guy, or maybe a stock promoter. I get texts from stock promoters all the time, promoting stocks for me to buy, but that's neither here or there. I pretty much gave up on that. But take care, guys.